Hey, what's up, folks? So, guess who's kicking this one off this week? So don't expect anything because I'm not the talker of the group.
At least we
So-
coordinated a little bit better this time instead of last week.
oh yeah, yeah,
Yeah.
yeah. Okay. Hey guys, so on the road this week. So pardon the background. The very nice residents in here, um, in Greenville, North Carolina, of all places.
Yeah,
I
you're in
don't
my
think.
neck of the woods.
Yeah, man, I haven't been. I don't think I've been in Greenville, North Carolina since Halloween of '97. Uh,
ECU Halloween parties.
and don't remember much about
Oh
it.
yeah, yeah, yeah. I,
So,
I I I had gone once and I never went again. In true story, I was the tequila shot man, and I had like a cowboy outfit with 2 bottles of tequila and like a bulletproof vest. You know, the thing that goes on, just sash or whatever, and it was all full of
yeah,
shot glasses. Yeah, that was a hit.
yeah, I'm sure you were popular. Um,
Mhm.
yeah, I got to be honest. We used to alternate between Chapel Hill and ECU for Halloween. Um, it just depended on what you were in the mood for.
That's right.
Um,
Hey, good
so
morning,
hey,
Dennis.
hey, what's up, Dennis? So, hey, folks, we're going to talk today. There's been a lot of stuff going around, and we'll get into some high levels of some of the things we've seen. But we're going to talk today about like, hey, what's capital look like in this market? Because investors are really cautious, and they should be. Tim and I talk about this is a great market to buy. I literally had this conversation with my wife this weekend because we were like, we want to buy, but we got operational stuff we got to take care of. And I'm like, but it's such a good market to buy, right?
Yeah.
Um, and we're not lying to our investors when we say, hey, this is a great market to be buying. I mean, the deals out there are crazy.
Yeah,
Um,
there's a couple key indicators too that we were talking about this morning
yeah,
that there's lead indicators that show when the market is going to start turning around, and we'll get into that in a little bit.
yeah, but yeah, yeah, yeah. And but guys, like let's be honest about it for a second. So investors are skeptical. They should be. I mean, let's look at what they see out there. They see high interest rates. They see, you know,
Stock market
deals.
crashing.
Yeah, stock market crashing. But then in the real estate market, they're seeing deals go bad. And it's
Yeah,
one thing to see deals go bad. It's another thing to see folks with deals going bad who looks like maybe they had bad intentions all along.
yeah,
So we're seeing some of that. That's starting to uncover. And then we're seeing guys who maybe didn't have bad intentions who just kind of like ran and hid when things started going bad. Um, I'll, I'll be honest, kind of like in my expanded circle a little bit. I know a guy right now who's going through that, and it's not looking good. I never would have guessed this from this guy. Um, but it's causing investors to kind of take back and say, hold, take a step back and be like, hold up a second, right? And you're seeing a lot more skepticism. That fear of missing out piece that we used to see. I haven't seen that in a while. Folks are like, I'll wait for the next one. Um, so that's kind of what we're seeing overall. But at the end of the day, we're going to talk through like, hey, how to handle it in this market, at least how we try to handle it in this
oh
market.
yeah, yeah, yeah.
Because I'm not going to tell you that this is the right way. I just know this is the way Tim and I choose to do it. In fact, I will tell you, I've had partnership calls where there's no agreement on how to handle it. and and the truth is you sit on those calls with partners and they're talking and you're like, hey, I don't know that I can tell you what you're deciding is wrong. It's an opinion. I don't agree with your opinion, but I can't tell you it's wrong. So we're really just going to kind of talk about like what the way Vitaly and I handle this kind of stuff. So Tim, how's it going, man? How you been?
Fuck, man, I've been sick for like 2 weeks. I can't seem to shake this, and there was a couple of guys at the gym this morning that I hadn't seen in 2 weeks, and they were like, "No, no, no, I've been gone for 2 weeks." I was like, "No, I've been gone for 2 weeks," and you can kind of still hear it in my voice a little bit, but this nastiness. I don't know. It's like congestion and whatever phlegm or whatever, but I can't seem to kick it. It's been like 2 weeks now. It's been kicking my ass, to be
Yeah,
truthfully honest with you.
Tim went down to Mississippi like 2 weeks ago and came back with some sort of Gulf Coast crud. I'm not sure what it was.
Gulf Coast crud. Yeah, yeah.
Yeah,
That bayou crudge
yeah, and
that the
then what?
crawfish grow in.
I did like a tour of the Midwest and the Northeast, and then came back sick as well. So I don't know. Maybe we should just stay home.
Yeah, I like that idea.
Yeah,
Yeah. So I mean, talking about investors and deals going bad and like why investors are hesitant. I mean, there's a lot of deals right now that people had pitched and invested money into, ourselves included, that are not hitting pro forma.
Yeah.
And pro forma is a very broad stroke for a lot of different things. And kind of what Tim was alluding to before was how we manage some of those expectations when things are not going to according to plan. And typically, what we like to do is have a conversation around controllable versus uncontrollable expenses. Hold me accountable to the things that I can control, which are essentially payroll, management fees, general and admin, uh, things of that nature. Things I can't control are utility costs, taxes, insurance, delinquency. I can't really control delinquency as much as people like to say. I mean, I had somebody reach out and say, well, you guys are managing this. Why are you not controlling the delinquency? And sorry, I can't control when somebody wants to just stop paying rent or they lose their job and they can't pay.
Yeah.
That's really the market and kind of the sentiment of what's going on in reality, right? Everything seems fine and dandy. You're like, oh well, you should be able to collect 100% of your rent. In theory, yes, but that's why repo man exists. Because the bank doesn't always get their banknote paid on the cars. And houses and things like that. So it's no different, right? So we just have to manage it to the best of our ability and try to be ahead of it instead of behind it. And those are the types of things that we're paying attention to and trying to guiding conversations towards of, well, this is something that I can control, and these are things that I can't. But everything on
Yeah.
what we can control, we're either meeting or exceeding, or maybe we are behind, and here's why. But it's not for lack of effort. It's not for preventative measures and conservative underwriting and conservative assumptions across the board. Things just don't always go to plan. How
Right.
you manage that, what's that Mike Tyson saying is everybody's got a plan until you get punched in the face. Well, it's kind of how do you handle getting punched in the face? Do you just kind of curl up in a ball and say, oh, well, this is hard, I'm not going to deal with it anymore? Or do you say, what else can we do to make up the shortfall or the difference or the change to
Yeah.
make sure that we are going to come as close to projection or performa as even Daniel Reddick saying I got the funk and woke up, he got it couple days ago. I can't seem to shake it, man. It's
Yeah.
hopefully I didn't give it to you, Daniel. I don't know, everybody's got it. But yeah, I mean, so that's kind of like why people are hesitant right now, is because they're seeing deals go bad. They're seeing deals not hit pro forma. They're seeing preferred returns being paused. They're seeing cash flow being tightened and really kind of constrained. And there's a lot of different things that cause that. And real estate, apartment investing as a whole, is not as linear and as stable, at least in the deals that we do. Let me preface that. In the deals that we do, which are value add, affordable deals, the fluctuation in cash flow can be pretty wild
Oh
swings.
yeah, for
You
sure.
know, you have an affordable resident that doesn't get their paycheck on Friday and they get it on Tuesday. They start hitting late fees and that $150 late fee and this eviction charge and this charge and that charge. And then before you know it, they're 3 months behind because it just starts this domino effect of
Yeah.
late fees that they never bury themselves out of.
Yeah.
So
And
go ahead.
yeah, and just to kind of dial in on that point for a second, because we see this a lot. You see a lot of folks that are like, "Hey, I'm going to buy in this market because this company's coming in. They're building this factory that's going to bring 2,000 jobs, right?" And it's like, cool, sounds cool. But hey, when that same factory hits a recession and lays off half its workforce, guess where most of those people live, right?
Probably at your
So
place.
yeah, and you can't control that. I mean, yeah, you can control the market that you buy in, but I don't know many people that aren't like, "Hey, there's a huge factory coming in and we're buying in this market." I don't know many people that turn that down.
Yeah. Yeah. Yeah, but I mean, so those are some of the big reasons why investors are hesitant, right?
Yeah.
Now, it's not to say that you can't raise money, and people are still doing deals.
Mhm.
We're still doing deals, but the difference is the deals look a little different. The sizes of the deals are a little different, and the questions and conversations are different with the investor. And it's not that they're not willing to invest into a deal, because smart investors know, when there was their blood in the streets, be greedy, right? And right now, I would say that we're in a blood in the streets period. We had been talking about it as it's coming, it's coming, it's
Yeah.
coming. It's here. Like, people are being defaulted on. Loans are going back, properties are going back to the bank. People are unable to refinance. What's not happening is people are not really talking about it openly online. I recently heard about a deal that went south, and the investor received a cease and desist letter to not talk about it publicly. And it's like, okay, well, that doesn't seem right. But
I know who you're talking about.
that's why you're not hearing about a lot of these deals, because they're not able to be talked about.
Right. Right.
Everyone has been saying, "Oh, well, it's coming, it's coming, it's coming." But it's here, guys. Like, we're going through it right now. Most of the deals that Tim and I are looking
Yeah.
at are deals that are in foreclosure or pre-foreclosure or deed in lieu, things like that, of that nature. And the investors that are smart about it are the ones that are willing to write checks right now. And they're like, "Oh, let's go get this directly from the bank at a discounted price per door, because we're essentially buying it for what they had as the debt, 2-3 years ago."
Yeah. It's kind of nuts, man. Like, I I'm not gonna I don't want to sound alarm bells because this is different. This market's different. But I mean, I haven't seen this many deed and liens and foreclosures since 10 and 11, 9, 10, and 11.
Yeah.
At least on the market coming to like, hey, would you like to buy something? Um, and, I mean, it's a lot of them. I mean, just in the last what 4 months, Tim, we have personally been in on with the option to buy five five properties that
Something like that.
were either had already been foreclosed or with a deed in lieu on them. Um,
Mhm.
yeah, yeah, five. I know that sounds like a made up number, but it's legitimately five, guys. Um, so I mean that's just me and Vitali in our little world here, right? I mean,
Mhm.
what else is going on out there? We're seeing a lot of this, and then we're seeing, obviously, like Tim's talking about, those performas not hitting. So, you know, full disclosure, Tim and I have a number of properties that aren't hitting performance. We have some that we've nailed down. That Vitali nailed the underwriting on everything except for taxes and insurance, right?
Mhm.
And it's like, what do you want me to do about that? Um, well, we are doing things about that. We're doing what we can about it. We can't control where they went, but we can control how we approach it going forward. So we're continuing to try to go after those things. And I think that kind of leads you into where, what we're kind of talking about here is like how you operate and how you handle things right now will make the difference whether people invest with you or not.
Yeah.
So, I I'm doing a series right now on social media, guys, if you want to check it out. But it talks about wins and losses, and we'll share with you. I'm going to share with you some of the things that we have or have done that haven't gone well or aren't going well. I think it's a really good opportunity to learn some lessons. But then ultimately, guys, it really comes down to how you're communicating to your investors and then how transparent you are with them about what's going wrong, right? And letting them know that that's happening. And then, quite frankly, if you have a deal that has not gone well, that you've had to take a loss on, it's how you communicate that to your investors and how you choose to move forward with your investors at that point in time. Um,
Mhm.
Tim, the one Vitali's talking about with the cease and desist. Not going to name names because I don't want to cease and desist myself. Not going to name names. I wouldn't want to be in the habit of doing that either. But a big reason that one is the way it is because that particular sponsor was like, "Too bad, so sad, sorry,"
Yeah.
and just and it's one thing to say, "Hey, your investment is at risk. It always has been at risk." It's another thing to look at them and go, "Them's the breaks, folks," right? And just
Yeah.
act like you don't give a damn about what happened, right? Like, there's a whole lot of different ways to handle that kind of thing. And we always talk about like people invest in the sponsor, not the deal, right? And I
Correct.
think I think you're seeing that a lot right now as people are realizing it's not about the deal, it's about the sponsor.
Yeah.
Yeah.
Yeah, I mean, because we've had a number of deals where, either they're in a tough location and difficult to
Yeah.
manage, or they're in great locations and still difficult to manage. There's any which way you can look at a deal. I mean, we've kind of come across it at this point, and how you handle the challenges is ultimately what gives people confidence to continue investing with you. At the end of the day, people want to achieve what you told them you were expected to achieve in terms of return. You can't necessarily always control that,
Yeah.
with unforeseen variables that nobody would ever budget for, like insurance going up 300%. Like, nobody would budget for that. But
Mhm.
at the end of the day, did you still make money or did you lose money? And if you did lose money, how did you handle that situation? How was it communicated? How was everything circumventing that event? Um, was the transparency and the accuracy, and were all of those things there that it wasn't a surprise, because it hurts most when it's a surprise. And people, that was something that we realized. It was like, just how you communicate with people is going to make or break the difference. So what people really want to see is, they want to see, going forward. I mean, this was true in the past, but it's ever more apparent now, is people want to make sure that there's skin in the game, with the sponsor and the deal itself. Um, and skin in the game looks like a lot of different things for a lot of different people. I can think about one podcast that I was listening to, where the person like only invests with Brandon Turner of all people. And he said, the reason that I invest with Brandon Turner is because of his social media presence and influence and all of those types of things. And it's not to say that he's the best operator, because he could be. I have no idea. But this operator in specifically has more to lose in the social media world than capital itself.
Yeah.
So if you tarnish your reputation, you will forever be stained, and that means more than having cash into a deal. There are other investors that absolutely require you to have cash in the deal. And there's no right or wrong answer here, but having some level of skin in the game is definitely going to be a conversation that a lot of people are going to have going forward, if they choose to continue to invest in syndications and real estate deals as a whole.
Yeah.
Um,
I like that, Tim. And I always struggle like talking about the social media stuff. Like I always struggle with, the flashover style kind of stuff, right? Like, I've had some folks kind of reach out to me recently and be like, dude, this guy was like flying all over the place, private jets, cars, all this other stuff. And I'm like, whatever, I'm not gonna I'm not gonna second guess how he chooses to do it. But I think one of the other things like you're talking about there is like the social media presence, that kind of reputation and what people can lose there. But kind of like you're talking about, and just to name another big name in the industry, Joe Fairless.
oh yeah.
I have a really good friend who invests with him, and when I was actually talking to this guy about a week and a half ago, and he was telling me, hey, when I first met with Joe, he goes, I looked at him and said, I don't give a damn about everything that went right. Tell me what you did on a deal that went wrong.
Yeah.
And it was Joe's answer to that question that ultimately made this guy no go, okay, I'm going to invest with you.
Hmm.
It wasn't all the returns he'd given his investors. It was what he did on a deal that went wrong.
Yeah.
Um,
Do you happen to know high level summary of like what the response was?
The response was, he had a deal early on, before he, had all the experience that he has now that didn't go well. And he made some bad assumptions, it sounds like. And at the end of the day, uh, Joe decided to take his investors, basically give his investors space in a deal going forward.
Mhm,
So whatever they lost, Joe said, I'm going to take your loss and move it to this deal.
mhm.
And then you're going to be in this next deal going forward. So um, you know, some people might criticize that and say, well, he didn't pay him back. It's like, well, he kind of did, right?
Yeah,
Like maybe he didn't give him cash, but think about that.
immediately.
Yeah, but think about that for a second, because sometimes these deals go bad, and the sponsor is literally like, I don't have any cash to give you. I don't. But what
Mhm.
I do have is equity in another deal,
Yeah,
and I can give you my equity in another deal.
right.
And that's ultimately what he did. And
Yeah.
it sounds like his investors were made whole through that process. So,
Mhm.
that's, commendable, right? I mean, he could have easily taken the approach of the other guy that we're talking about, where he was like, "Sorry, it's at risk. Too bad." Um,
Yeah, right.
but it
R
sounds like he owned up to it and said, "No, you know what? I'm not going to do that."
Yeah.
So,
Yeah, yeah, I mean, that definitely, I think it's more so it's character, right? It's
right.
like, there's a lot of people out there that do it for the money, and there's a lot of people that do it for helping people. And I think
Mhm.
the more you dig into those conversations, you can understand whether the person that you're investing with is in it for the money or for with helping people. And I can tell you that when you're trying your best to help people, you make decisions because it's the right thing to do, and it doesn't necessarily benefit you, such as giving away equity in other deals that you have, but
Yeah.
it does show your character as an individual, and I think that that's far, far, far more valuable.
Yeah, I completely agree, man. I still say, I still kind of stand by the fact that it's like how you treat people when things don't go well
Yeah,
pays off way more than the best deal in the world.
yeah.
I really do feel that way.
Yeah, I
Um,
mean, yeah, so I mean, basically, I mean, so if you have had worked with investors in the past and you have lost their money, maybe this is something that you need to revisit on how to gain them back as one of your investors.
yeah,
Because N somebody saying that they're not gonna invest with you doesn't always necessarily mean no forever. It could just
right,
mean no for right now. I mean, you have a warm introduction and something didn't go right, but you can always mend a bridge, right?
right.
Yeah, JD saying, core values, treat people how you wanna be treated. Yeah, I mean, golden rule
Yeah,
number 1, right? I mean, that's the simplest way. I would hope that I mean, I have invested into a deal and the investor, the sponsor lost money and he liquidated other assets to pay us back.
right,
I haven't been paid back in full and it's been over what, a year and a half now, but it might come in the future and that makes me feel better about it.
yeah,
It's like, it makes me stomach and say, hey, they did their best and it wasn't ill intentioned and they're doing what they can to make it right, whatever that looks like, it's just appreciated that
yeah,
the gesture is appreciated because it truthfully is the right thing to do.
yeah. I completely agree with you, man. I like this statement here. This is trust is no longer a nice to have; it's the new currency, right?
Oh yeah, yeah. But and trust looks like a lot of different things with a lot of different people,
Yeah, for sure, for sure.
for a lot of different people, I should say. I mean,
Yeah,
one investor might trust you just because of the relationship, and another investor might trust you just because of how you handled something, right?
yeah,
Um, you know, it could be completely different, spectrums here that we're talking about.
yeah, yeah. And then guys, listen, I actually, and I know some guys who have had some deals go bad, and they've done things to try to make their investors whole, and at the end of the day, even though they had the best intentions and they actually tried to make their investors whole, or they followed through on it initially, they had investors who were mad.
Yeah. Oh,
and
everyone. Yeah. Of
and
course, I
there's
was mad when I heard about us losing
and
more than 50% of our cash.
Yeah, but at the end of the day, they were trying to do the right thing. They did not walk away. They said they were going to continue to work for it. But at the end of the day, there were investors who were mad, who were just like, there was nothing you could say to them at that point in time that was going to change the narrative in their
Mhm.
mind, right? So, and you got to be prepared for that, right? You got to
Yeah.
be prepared that people are going to be mad. They may have a very good reason to be mad, and you got to let them. You got to let them be mad.
Right. Yeah. It comes with the
So,
territory ultimately, right?
yeah, yeah. If you can't handle it, I guess don't do it. So. It's like I tell people, man, like if you can't handle ebbs and flows and roller coasters, this probably ain't the business to be in. Um,
Right. Yeah. I saw JD, I don't know if you're still listening or not, but I saw your post this morning about how business is hard and I mean, my God, that really hit home for me because you can have $1 million in the bank one day, and then a month later, you got like 3,000 bucks in the account, and you're like, how am I going to pay payroll? The swings can be just so massive, in the stress roller coaster. Like trying to stay even keeled in the ups and the downs is so hard to do because man, like some of these things are just so hard to do, and when it's done, you really want to celebrate, because you've just been through a hard thing. But man, when the lows are low, let me tell you, man, I can't tell you about being up at 3 o'clock in the morning thinking about things, and you just start to spiral, and create anxiety and stress around things that haven't even happened yet. But man, it takes a real toll on your life, your health, your relationships, like your personality. Even my wife called me out recently. She's like, you're stressed. And she was like, I don't think I've ever seen you like this before. And she was like, we had new neighbors move in. And I am a social butterfly. Like I love going to meet new people and chatting it up. And like she was like, you came outside and you just sat in the chair and you didn't like want to come over and say hi. I was like, I wasn't in the headspace to say hi. And then the same thing happened when we were we were at the beach and Coral walked over to our friend, this kid that was, not much older than she was. And like my wife was over there chatting. She goes, normally you're the one that's like talking to everybody. And I was like, I just not there. And that's how she knew I was genuinely stressed because my character had changed.
Yeah.
And it's like, okay, you got to think about how to get yourself out of those funks because it's okay to think about and be worried about things that could go wrong, but it's like, okay, there's a time and place for it. Now it's like, okay, get that out of your system, work through it. Now, how are you going to fix it? How are you going to, it was one thing I said to one of our regional managers recently was, things were difficult. We're going through some things in the company that are challenging right now. And what I said to her was the only way through and the only way past it is through it. And she was like, just like I needed to hear that because no matter what, like you have options of you can go, you can curl up in a ball and shut down, or you can just keep working through it and get through it. And this too shall pass, right? I mean, as long
Yeah.
as you don't give up.
Yeah, man, I always tell you, I always tell people this one, like, because I love you can curl up and just let it happen, or you can do something about it. And I still, to this day, one of the best lessons I ever got when I was like 15 years old was I was getting my tail kicked on the football field, man. Got called up for a varsity game, and I had replaced the defensive end because he had been injured, and I just got my tail kicked all the way down the field. And I walked over, he's like, "That looked like it sucked," and I was like, "Yeah, man,
Yeah,
yeah,
that
that
did.
hurt." I was like, "That hurt." He goes, "Did you like it?" And I was like, "Not one bit." He goes, "Well, then do something about it."
Yeah,
And I'm like,
don't let it happen again.
"Oh yeah, I
Yeah,
should
yeah,
do
I can do
that."
that. Yeah,
Yeah,
sometimes you just need a good kick in the ass, to kinda get out of a funk and,
yeah,
it happens to everybody, and if you tell me you've never been in that, you're a liar,
yeah,
you are
yeah.
a liar.
Hey, but man, good call out to JD there, because JD, man, I hear you. I think in what Vitali's talking about, that's like words of experience, right? Because
Yeah.
again, I can remember the first time I had like 500,000 cash sitting in the bank, and I was like, "Yeah, all right," like,
Alright.
"All right, look at this." And
Yeah,
then, like you're talking about, like, I don't know, 3 weeks later, I was down to like 20 grand, and I
yeah,
didn't go blow it, folks. I didn't go blow
yeah,
it, but that moment, and you're kind of like, "Whoa, like this ain't the time to relax," right?
right,
And
right.
Tim and I have had some moments recently where we've had some decent liquidity sitting in the bank, but I am not comfortable when I see that anymore, right?
No, no, no,
Uh,
no, absolutely not. I'm like, "Oh
no,
gosh."
yeah,
It's interesting though how it can change and over time, experience changes you, right?
oh yeah,
I think, kind of getting back to our sentiment here about like how to
oh
win
yeah,
your investor trust is, all of that goes to show like you talk about these experiences with your investors of like what you've been through, why, how you fixed it, and be honest. I mean, look, we're being honest right now. I mean, this was a couple of weeks ago that it was just like I was down in the gutters and it happens. But you pull yourself out of it. You continue to work through it, and then you solve problems. I mean, Tim and I would go back and forth and say it's just another problem to solve. We just solve this problem and move on to the next problem, and not try to like dwell on things that could have happened or it doesn't matter. Is the decision that we made in the past? We can only change what's going to happen in our future. So let's make decisions that help us in our future and not how we would have done things differently because it doesn't serve anybody. It doesn't serve
no,
you to think about
no.
those things.
So
And being transparent and vulnerable with your
yeah,
investors and talking about that kind of stuff, that's what builds trust. I
I
mean, it
agree.
builds trust with everybody listening to the show. They understand, Tim and I we're human. We're vulnerable. Like we have things go up and down and good and bad. And like we experience the same things everybody else experiences. And you just have to let people in to that, past that vulnerability or barrier to let them know that, hey, not everything goes right. And you feel the impact of that too. But like, what did you do about it? Right. Those are the things that are the most valuable and build trust. And just not answering somebody is not the answer.
Yeah, so hey, as we wrap it up, guys, like exactly what Vitali said there, and I think vulnerability is the key, right? Like my 2 cents here, just my opinion, is LPs that are out there, GPs that are out there, guys. Like this is a really good time to be sharing not just the wins, but the losses, and be talking about the losses, what you did, what you're doing, LPs, like what you learned from, that sponsor, like how they handled it. Let's kind of talk and share those things with each other. Now, and I'm not talking go out and talk trash about somebody. That's
No, of
different,
course not.
right? let's have constructive conversations about what's going well, what's not, what we're doing, what folks aren't doing, and kind of share those things with each other. This is a really good time to learn, quite frankly. And so, if you guys are welcome, if you guys are willing to go out there and kind of be vulnerable about this stuff and share, the losses and the lessons learned, I think it's a really good time, and we can all come out of this better operators moving forward. So,
Yep. Yep. Yep.
all right.
Cool. All right, man. Well, I thought this was a great show. I think it's timely. I think it's important. You know, hopefully you guys learned something about this. You saw the transparency on our side about how we handle things when things are going right, things are not going wrong. Take some of these things and use them in your own experiences with your own investors, because that's ultimately what's going to build the trust. And when you come out of this with even stronger relationships than when you had before, I promise you things get easier. They absolutely get easier when you have more trust and you have more faith in people, and it makes decision making much, much easier because you've seen what people do in the bad times. Now let's go celebrate in the good times together. But getting
Yeah.
through those bad times, you really have to stay focused and actually get through them. Yeah, John, thanks, Bo. Appreciate the comment there. Yeah. Um,
Yeah.
Joe Bisping's got another comment. He said, "I think good LPs don't expect everything to go perfect all the time." That is so true. I think what they expect and look for sponsors who will have integrity in those moments. Yeah, I think, Joe, I think you're spot on with that. I will say though, that basically from like 2019 to 2022, everything was so good. There's a lot
Yeah.
of newer LPs that just expect things to be good. Kind
Yeah.
of lost, it's that set. What's that statement of, stocks only go up? That's not entirely true. Real
Oh
estate
God.
only goes up. That's not always entirely true. With enough amount of time, it can. There's always variables and things like that, but there is some level of level setting with LPs that so that they truly understand the level of potential risk and
Yeah.
pitfalls and downfalls. And being, again, it comes back to you as the operator or the sponsor to disclose those things and bring them out and put them out in the air and talk about them so they're aware of it, right? I mean, the more aware you can make your investor, the more educated you can make your investor, the better relationship and more trust that you're going to have with that investor. Because I
Yeah.
can't tell you, I mean, if I was going to invest in one of your deals and you told me, "Hey, I don't know if you know about this or not, but it is something to consider that could happen," I would trust you more now for disclosing that and have a level of appreciation that you brought it to my attention rather than hiding it from me and just being surprised by it later.
Yeah, and guys, just a yeah, very good point, Tim. And just to wrap it up, because I think what Tim's getting to is kind of this is, yeah, I've absolutely had investors in the past like get angry about something, but for the most part, 90% of the feedback I get is just communicate to me, right? Just communicate to me, like good or bad, be transparent and communicate. So I think if there's one thing that we could all work on, right, it's just communicate. Don't be
Yeah.
afraid to communicate, right?
Yeah.
So
Yeah, yeah, Bo. One last thing here, Bo. I appreciate it, and I agree. How you build that trust, and having that honesty and vulnerability is so vitally important. All right,
good.
guys, we'll see you next week. Peace.
See you guys.